Here we go with our real estate and financial update here locally in Metro Detroit and on the national level and what's been going on over the last 30 days. And we have a lot to unpack, guys, and I'm just about to do that. My name is Mike Perna with the Perna Group Realtors. We sell over 1,000 homes a year. We help over 1,000 families buy or sell real estate. So we definitely have our ear to the ground in every community in Metro Detroit. Here we go. It has been a wild last 30 days here. First, I'm going to start out with the jobs report. The jobs report came out unseemingly strong with 468,000 jobs as far as job growth goes this past report. I can't wait to see what the next report shows. But more importantly, we have ticked down past 4% as far as unemployment goes. We are now hovering at 3.8%, which is considered zero unemployment by almost every economist in the land. 3.8% unemployment is pretty much just the people that are actively opting out of the job market. People that have decided to maybe leave a job, take a hiatus, not take a new job. They've saved some money. They want to, take that European trip or that vacation, or just take some time off. So those are the people right now that are not working, and we can see it with the help wanted signs up and down each and every one of our streets. It is definitely time, if you haven't already, to ask your boss or ask your job for that raise. And you definitely want to put a good case together. I would highly recommend going to Indeed, finding similar jobs where there's similar experience to yours, what they're hiring at, and if those wages are higher than yours, take that in and show your boss. Don't forget to toot your own horn a little bit. Put out there all of the things that you have contributed to make this company great, to help the bottom line, to help the growth of the company, to help sales. Whatever it is that you're contributing to that company that's worth more than what you're currently getting paid, you definitely want to point that out and then bring those other jobs. Not in all cases is the answer go find a different job. It could be just enlightening your current management team to, hey, this is now the going rate for this job, and this is where we're at here in 2022. I mean, I've had several people that have counseled to do that, and please don't hesitate to reach out to me anytime, 248-886-4450. I can also help construct a case for you. Next up, inflation. Guys, we all know it's crazy. It's 7.9%, even higher than the 7.5% in January. It is still going up, and it is crazy, and is being punctuated by gas prices, which have finally turned the curve and started to come down a little bit. Now, with some closures due to COVID in Hong Kong and mainland China, the thought is there's going to be less oil used because of those lockdowns, so the cost per barrel of oil had gone over and now came back down below $100 per barrel. We're going to see that show up in the pumps here pretty quickly, and probably at the time that you're watching this video, we've already seen gas prices come down 20, 30, even 40 cents. In addition to that, some of the states are petitioning the federal government to leave off for a couple of months the gas tax, which I believe the federal gas tax, the last time I read it, was about 24 cents per gallon, just to help people get through this high price time. Now, the moment we have all been waiting for probably the last 30 months, the Fed has officially done its first major rate hike. This does not necessarily mean higher mortgage rates, because the finance sector had already raised rates in anticipation of this interest rate hike. So what this looks like is interest rates have gone from 3% roughly to 4%. But guys, don't forget, we have 3 more rate hikes on the way throughout the year if we don't get this inflation corrected. So over the past 12 months, the Wall Street Journal has found that for the average American, home price growth. So if you own a home, your equity position went up, your appreciation went up more than the average job in the United States. So you actually made more in house appreciation than you did from a job. If you had bought a home in 19, if you bought a home in 20, if you bought a home in 21, good job, good for you, and way to not let the fear of that housing bubble kind of permeate that and continue forcing you to rent. Now, if you're considering buying a home and you're thinking maybe I should put this off because of the bubble, guys, get into the market. And I'm going to parlay that directly into Metro Detroit real estate. So the one number you need to know is 4.3. So right now, the average home is down to 4.3 offers per home from a high of 15 to 18 offers, depending on the city, just in January and February. In January, the number of homes that went onto the market was down 24% from the last January in 2021, which was the lowest month in recorded history since they started recording these numbers in the late 70s. So literally 24% less than that. Now, really all it was a pause button put on by home sellers that were sometimes a little afraid of where they were going to move to next. Maybe they didn't want to move in the winter. Maybe they wanted to wait until closer to the end of school season, because homes coming on the market came roaring back in the second half of February and the first half of March. So the number of offers that were on homes in January was an average of 15 to 18, depending on the city, and now it's down to 4. So now people have a reasonable chance of getting the home that they want and beating competitive buyers. Last but not least, there has been a talk of a housing bubble. I did another video on this, but I'm just going to recap this very quickly. Because of rising rents, because of the strong economy, because of the inflation rate, because of all of these things, there is no housing bubble. To dive super deep into why this is, check out our non-housing bubble video, which has been posted on this site, and also subscribe for any updates to that theory and that theorem as this progresses. The economics are just behind home prices actually starting to flatten a little bit in quarter 3, quarter 4, and then of course next year, but they are going to consistently raise 3 or 4% per year, especially as rents are raising another 10% this year, maybe as high as 12% this year, 25% over the last 2 years, right? Pushing people to go from renters to homeowners. But in fact, home values will be going up roughly 10% for the remainder of 2022, and then 5 to 7% in 2023 and 2024 and beyond. Again, if you're holding off from jumping into the market, today's the day, now's the time. We've got less offers per home, which is awesome. We've got interest rates that are going nowhere but up. Not a good thing, but good if you're taking advantage of it in the short term. You still have your mortgage interest reduction tax write-off. You still have appreciation. You're still paying down a mortgage. And more importantly, you're locking in a payment at a fixed rate with a fixed mortgage versus rents, which will continue to climb year in and year out, minimum 3%, usually 5%. My name is Mike Perna. This is your real estate market update. Don't forget, guys, we would be honored to serve your family with your home purchase or your home sale needs. Give us a call at 248-886-4450 and make it a great day.